Hello friends, as you know, stock market crash news are everywhere nowadays. Not just stock markets, also cryptocurrencies. All I'm hearing is sell before too late and so on. Now today we'll look at if the stock market is crashing or is it just a pullback, a correction. As usual, I'll cover technical analysis and fundamental analysis such as news, rumors, predictions. I'll give my insights about the matter. Let's start then. As you know, stocks are having giant drops one after another. 10%, 5%, 3%, lots of mega drops. This does not concern shareholders at the moment. However, short-term option contract holders may need to be concerned because those contracts lose value quickly. As you know, an option contract does not laugh at the same joke twice. Once a value is lost, it's harder to get a break-even. Now, what causes these sharp drops in the market? Main reason is quantitative easing tapering. Whoa, what's that? You don't need to worry yourself with these technical terms. This is why I'm here for you. Make things simple and neat. So in the simplest terms, let's understand QE first. Quantitative easing means government increasing the money supply to the system through buying bonds. This means that you can buy that PlayStation or MacBook Pro with the notch easily, paying less interest, like me. So you can spend so much money because there will be so much money in the system. Banks will lend you money much easier than before. In the end, you'll spend more money, you also invest more and buy shares also. These are great for companies because their earning reports will be boosted due to the higher sales. But there's a cost to everything, like action and reaction. If you spend more, prices will go higher, quicker than before, due to the higher demand. This was what was happening in the last 2 years. We spent money like crazy, never before. I don't want to even see your credit card statements. Higher demand, higher prices, higher inflation, and governments hate inflation because inflation costs governments voters. Yes, a negative correlation. Higher inflation means fewer voters. Now, quantitative easing tapering is just the opposite of QE. Government stops or slows buying bonds. So less money goes to the system, and as a result, banks lend you less money or harder. So you won't be able to buy that car anymore. QE tapering is bad for companies and stocks because of a couple of reasons. Hard to borrow money, few sales, worse earning report, scared investors. Tax loss harvesting is another reason of sharp drops in the markets. Again, to simply define it, selling stocks at a loss to pay less tax, generally around the end of the year. To benefit from this, you'll also need to sell some shares that you've gained profits from. So this speeds up the sales in the markets. Then investors generally reinvest the money in the new stocks. So it's common to see lots of selling and corrections in the market in December. And see lots of stock investing and stock market rallies in January. Enough with all these fundamentals and overwhelming terms, and let's see some technical analysis. So first of all, let's talk about what happened. How did we come to this? Then let's talk about what might happen as a technical analysis prediction. If you have watched my How to Trade RSI Divergence with 4-step trading technique, you would be able to catch the RSI divergence and the stock market crash or correction sooner. However, I will admit something. I was so busy around the end of November, I was not able to analyze it as much as I wanted. But it was obvious with the 4-step RSI divergence technique. Let's see how it happened. Step 1. Confirm RSI divergence. As you can see, the divergence was here and it was pretty obvious. Step 2. Confirm tradable higher highs. This little guy here is our first significant high. And this is the second higher high, and this was our third higher high. As always, I never trade first and second higher highs. I always trade third and other higher highs or lower lows. Step 3. Confirm boxes and parabolic action. If you do not know what a box is, please watch my Trading RSI Divergence video. It's simply a difference between higher highs. Let me draw it. As you can see, my second box is much smaller. This tells me that a possible market structure change happening from uptrend to downtrend. And step 4 is about confirming entry with beating buyers or sellers and stock RSI crossover. I will not go over so much detail, but since my strategy, a short entry would be around here, my stop would be at the top. My target would be this volume cluster, because volume clusters are significant support or resistance. Since my strategy it dropped around 5%, if you would buy put options, you could have doubled your money. So always watch for asset divergence for market structure changes or crash expectations. Great, we talked about what happened. Now let's talk about what might happen from a technical standpoint. As you can see, we are still in this giant uptrend channel. What is happening right now is not a stock market crash. It is a pullback, or you may say a correction. I will call this a stock market crash if the QQQ drops below $370 and stays there under this trend channel support. Now we have two volume clusters that act as a support. The first one is this one at $380, which already acted as support. And the second one is this one at $375 as a secondary support. So as long as the market holds this 380 and 75, we call this a strong pullback, not a stock market crash. Again, a crash will be if we go out of this trend channel. Then things may go terrible, I have to admit. Technical analysis is just simple guidance during times like this. No one in the world can know what may happen the next day. What we do here is just strong, collective and educated decisions to prepare ourselves. Now let's look at some news and check the fundamentals of the market. Okay, now what? Now what to do? First of all, calm down and relax. Secondly, stock market crashes, pullbacks, corrections, whatever you want to call them, do not take years or not even months as much as they used to. Markets cover quicker when we compare it to decades ago. Why? Because the number of investors has increased. Nowadays, teenagers to the elderly people are in the investment and trading game. Believe me, I'm hearing statements like, I bought Bitcoin with the half of my cash from an 80-year-old person. Or should I invest more in Tesla from a 12-13-year-old child? With the power of internet and social media, trading and investment have changed compared to before. To be honest, each correction is healthy, and it has been happening every time. However, if you look at the market, it never goes down. The market is always gonna go up, because it's the nature of the market and humans. This is the result of evolution, urge to survive and progress. The vast majority of people are not even aware they can short the market or simply buy put contracts. Most investors have a simpler approach, like buying shares. This is another reason why markets always recover, because there's always someone who is gonna buy. What can you do right now? Slow down trading. You do not have to trade every single day. Actually, holding in cash is sometimes a much bigger way of making money rather than trading. Because when you lose 20% of your account, you have to gain 25% to be even break-even. Please protect your cash. You may stop buying short-term option contracts because this volatility will destroy contract values without possible recovery. Keep following your trusted companies. This is what I do. If I see a discount on a company stock, which I love, I buy long-term option contracts or simply get some shares. Okay folks, time to relax and do not consider everything as a stock market crash. Every correction has a rally afterward. This is why I always keep some of my money aside to trade or invest like these days. At the end of the day, the first rule is always protecting your capital. Because once you lose money, it's 2 times harder to put it back. Believe me, I went through that process and it was really stressful. Now, I hope you enjoyed this video. Please subscribe and like it if you truly liked it. See you soon and take care.